Hey there, and welcome to This Explainer. Today, we're unpacking one of the most frustrating paradoxes facing ambitious professionals right now. Did you know that nearly half of people earning over six figures report that they are still living paycheck to paycheck? It's crazy. You work incredibly hard, you climb the corporate ladder, and on paper, you're making fantastic money. Yet there's this persistent underlying anxiety that you aren't actually getting ahead. Well, we're going to look at the exact mechanisms behind this phenomenon, and more importantly, the proven systems you can use to break free from it.
Okay, let's just get right into this painful reality. You bring in thousands every month, right? But somehow, by the end of the month, that money has just quietly vanished. The truth is, salaries are designed to keep you comfortable, but they are definitely not designed to make you wealthy. High earners frequently fall into the trap of expanding their liabilities. Better cars, larger homes, instant upgrades, constantly thinking they're winning. But in reality, they're just living paycheck to paycheck on a luxury scale. Active work keeps you stuck in this survival cycle, honestly, no matter how many zeros are on your paycheck.
All right, let's move into Section 1, the active income trap, and exactly why high earners are still stuck.
The fundamental flaw of the traditional employee mindset boils down to this: trading time creates income caps. Whenever you rely solely on a salary, you're trading a finite resource, your physical time, for cash. Take a highly specialized surgeon, for example. They might earn an incredible hourly rate, but they still only have two hands and a very limited number of hours they can spend in the operating room. It really doesn't matter if you're earning $20 an hour or $2,000 an hour. Your income has a hard mathematical limit because your capacity to work is physically capped. This active income model is exactly what keeps so many highly skilled professionals completely financially restricted.
Which leads us perfectly into Section 2, time is a finite resource. It's basically a mathematical impossibility to get ahead this way.
Think about the number 24. That is the great equalizer. Every single person on Earth, no matter how talented or driven, only gets 24 hours in a day. Hours are always finite resources. You cannot scale physical time. If your only mechanism for making more money is to work more hours, you are inevitably going to hit a ceiling. Even if you hustle, take on double shifts, or work super late into the night, human effort eventually fails. You get tired. You burn out. Hard work alone cannot overcome this equation, which means physical time is the ultimate bottleneck to getting rich.
The crucial point here is this stark trade-off. You can always make money, but you can never, ever buy more time. Think about it this way. When you make a purchase, particularly an impulsive one just to look successful, you aren't just spending cash. If you go out and buy a luxury designer watch for $5,000, you are trading actual weeks of your limited life hours just to put a status item on your wrist. You're literally trading your future financial freedom. The wealthy deeply understand this. They never ask if they can afford something today. They ask what this purchase is going to cost their future self. They vehemently protect their life hours.
Let's pivot to the solution in Section 3, decoupling time from money. This is the ultimate paradigm shift.
You see, there are two completely different realities when it comes to earning. In the employee mindset, the average earner is constantly trading their time for dollars, and usually spending those dollars on liabilities that just lose value over time. But then there's the owner mindset. The truly wealthy, the invisible rich, they play an entirely different game. They trade their cash for assets. They don't chase a higher salary. They focus all their energy on acquiring systems that work while they sleep. You have to decouple your income from time, shifting your focus from how much you earn per hour to how much your money can earn for you passively.
So how do we actually do that? That's Section 4, building scalable business assets. Basically creating your very own money machines.
First, we need to define what we're actually aiming for here. A scalable asset is a system or an investment that generates income and compounds in value, all without requiring your continuous active labor. Build scalable business assets instead of just trying to grind for a higher salary. Just think about the difference between writing a book versus consulting by the hour. A consultant only gets paid when they are on the clock. An author, though, they write the book once, and that digital asset can sell thousands of copies for years where they're completely disconnected from the process. You want a system that produces cash, whether you're at a desk, sitting on a beach, or sound asleep.
So, what exactly are these scalable assets? Let's break them down. First up, stock market equity. This is stuff like index funds, where you own growing shares of entire markets and benefit from compound interest without managing a single employee. Second is rental real estate, which puts predictable monthly cash flow directly into your pocket while the underlying property appreciates in value. Third, we have digital IP and media. Think creating digital products, courses, or content that you build once and just sell on repeat. And fourth, automated systems like software or hands-off businesses that run without your daily physical labor. Now, you don't need to master all of these, just pick one path. Building just one of these streams slowly shifts your entire financial life from active labor to passive leverage.
But listen, there's a massive warning sign here. None of those assets are possible if you fall into this trap, inflating your lifestyle. As income rises, spending almost always follows. This is called lifestyle creep, and it quietly ruins your success. If you spend every single salary raise on a better car, a bigger home, or crazy expensive dinners, you're just expanding your liabilities. Let's be real, keeping up with the Joneses usually just means going broke with the Joneses. It absolutely destroys your ability to buy scalable assets. Looking successful is highly expensive. Actual wealth is what you keep and what you grow.
So here's the exact, actionable sequence you need to execute to break the cycle. Step 1. Keep your expenses flat. When you get a raise, delay your lifestyle upgrades. Just maintain your current living costs and resist that urge to immediately upgrade your standard of living. Step 2. Invest the gap. Take that entire salary difference and automate it straight into your investments before you ever even see it in your checking account. Step 3. Buy ownership. Shift completely from being a consumer who buys depreciating status symbols to an owner who buys compounding assets. This 3-step sequence is the exact bridge you must build to safely escape the active income trap.
Which brings us to our final part, Section 5, Expanding Your True Wealth. This is all about predictable freedom over the long haul.
When it comes to wealth, the classic 80-20 rule really dictates everything. 80% of your massive wealth is generated by just 20% of your efforts. Specifically, those efforts focused on major financial levers, like your core investment strategy and your monthly savings rate. Being constantly busy is not real productivity, guys. Activity is not financial progress. You must aggressively decouple your income from time and leverage your capital instead. That is how wealth expands. You don't need to stress over tiny details or work yourself into the ground. You just need to get the big, high-leverage pillars right. And to ensure those big pillars stand strong, here are the non-negotiable daily habits of the invisible rich. First, automate your investments. Human willpower fails, systems run forever. Set it up once and forget it. Second, think in decades, not days. Stop checking your portfolio every afternoon. True compounding is a long game that requires incredible patience. Third, build multiple income streams so your survival isn't tied to a single employer's mood or a sudden layoff. Fourth, prioritize paying yourself first. Automate your savings before you ever pay a single bill. And finally, say no to short-term comfort. Delay your gratification now so your future self can be completely, unconditionally free.
The most crucial takeaway from all this is that getting rich quick is a total illusion. Boring consistency outperforms everything. Fast gains are usually just unstable hype, but small, daily steps compound beautifully into lasting financial empires. Execution beats a perfect plan every single time. It might feel deceptively slow at first, like nothing is happening, but you have to stick to your simple plan. Execute your system every single day, let the math work in your favor, and let compounding do all the heavy lifting in the background.
So that brings us to the final, incredibly important question you need to ask yourself right now. Are you building an asset today, or are you just renting out your time? Remember, time is your most valuable, finite resource. Don't trade it away just to maintain the illusion of success. Direct your money deliberately, build your scalable systems, and take complete control of your financial destiny. I really hope this explainer completely shifted how you view your salary and your future. Keep learning, keep building, and thank you so much for joining me today.